BloombergQuint. You're watching BQ Conversation, and my guest today is Ashishkumar Chauhan, MD and CEO of BSE. Mr. Chauhan, thank you very much for joining us on BloombergQuint. We saw the Sensex crossing the milestone of 60,000 on Friday. It's a big momentous occasion for all of us as the index crosses many milestones. But to begin with, my question to you is that, in your experience in the last 2.5 years, when we have seen a lot of participation coming from retail and various cities, what is the trend that you are picking up with respect to equity markets?
There is a clear interest in the stock market now, and literally we are getting close to 1 lakh new investor accounts every day. That doesn't mean we are getting new investors, because investor accounts are actually with broker, and it's possible that one investor may have accounts with even 1 or 2 brokers instead of only one broker. So that's where there might be slight double counting. But effectively, the pace of change has been almost 60%. 1.5 years back, we had close to 5 crore investors. Today, we have above 8 crore. So effectively, 3 crore investors in 1.5 years, vis-a-vis 5 crore in first 145 years, right? So it's a very large jump, almost 60% in a very short time. And that tells you that retail investors across the country, from literally states which were not on the investment map, also started coming up, even from Lakshadweep, from Andaman Nicobar, from Manipur, from Jammu Kashmir, and some of the northern states which were not so great in equity investments. Earlier, only Maharashtra, Gujarat were supposed to be the 2 centers for investments. Today, most of the pressure is coming from UP and northern states. So in a way, you can see the equity cult is actually expanding, and that's somewhere I think it's broad-basing the overall framework also.
What is fueling this kind of broad basing which has happened? Is it because last 1.5 years we have seen a lot of people from cities moving back to their hometowns, and they're working out of there, and so we are seeing new registrations coming up from there being as part of that? Or is it the new generation which is coming up is much more red and they want to participate in the equity markets?
No, I think both are true. Both are true. One is that young people are also coming in large numbers, which was not true early on. They are also telling their parents to also get investments in equities. One of the reasons is, I think, very low fixed deposits rates. The easing across the world has also forced India to reduce the interest rates. And that has basically ensured that some of the retirees are finding themselves in a difficult situation in terms of the interest they earn out of their fixed income. While as the stock markets, the equities market have given tremendous returns. And that's where many of them are also trying to now hedge by investing in equities market. Of course, there is also a consistent flow from EPFO because of the 15% incremental coming into the ETF. So I think there are many reasons why the stock markets have given returns and why so many more people are coming into the market. The third part, I think, which is enabled, if not fueled this number of investors coming, is the automation. Earlier, if a broker had to open an office in a small town, it would have costed him or her so much that it was not viable to do things. Now with mobile, there are brokers with very few offices are having a huge amount of trading and huge number of customers, is because they are able to do eKYC, get them onboarded on exchanges. And BSE particularly has a very large franchise of the mutual fund distributors. So a large portion of BSE's investors are also investors in mutual fund, not necessarily direct traders or direct investors in equities. So because of BSE's broad-based investment-related portfolio of investors, we see a very large chunk coming due to the mutual fund industry also, not only due to the stock or stock investment direct part.
I was speaking to one of the CEOs of the mutual fund, one of the top 5, who is coming out with an IPO, and I asked him the same question. Equity market was able to attract nearly 2.5-3 crores of new investors, but we didn't see that kind of new investor, unique investors coming into mutual funds. when at one point in time you used to say that any initiation into the stock market should come through mutual fund, because there is a risk involved coming directly to the mutual fund via vis-a-vis going to the mutual fund. So where do you think the mutual funds got left out, and the equity markets was able to
money to equity markets funds compared to the entire industry collecting, because in traditional channel some outflow, whereas the BSE channel of almost 75,000 distributors put together is giving them actual net inflow for last 1.5 years, including in the worst periods. In BSE never had a negative sort of flow in mutual funds, and today also BSE does almost 35,000 crores a month of mutual fund business. Large portion of that is actually a subscription, very little redemption. So I think it is not correct to conclude that mutual funds have been left behind. In fact, of course, the stock markets are exciting. They go up and down so much. The youngsters who have a mobile phone at hand or their computers are able to directly participate. But there are many more number of people who are attracted to mutual funds, and rightfully, as you rightly said, it's less risky, more diversified. Some experts kind of work for you on that, and so on and so forth. So I think somewhere the story is still about mutual fund as much as about secondary market and even IPO.
My point is not about the AUMs which mutual industry is bringing up. I'm talking from a point of unique investors which is adding up to the mutual fund industry. Last 1 year, when we saw 2.5 crores new investors coming directly to the equity markets, we haven't been able to see that kind of addition of unique investors to the mutual fund industry. That is where I'm trying to figure out, and I need your thoughts. Where is the mutual fund getting it wrong, that they're not able to tap the entire 2.5 crores coming directly to equity markets into the mutual funds?
I think secondary market will always be a superset, because a person who is coming into, what has happened is earlier the mutual funds had a different channel of distribution. Today the BSC StarMF is pretty much the UPI the mutual fund industry. Everyone is basically there on StarMF or coming on to StarMF at some stage, and that's where I think whenever a broker registers or a distributor registers, the investors get registered for secondary market as well as for the mutual fund and also for primary market, and that's where you think the secondary market has more investors. But today the investor is able to move seamlessly between the mutual fund as well as secondary market, and I see many people are investing in mutual funds also, and I think when they publish their reports on the new unique investors, I think it will be equally good. I don't see, it might be slightly less than the secondary market because secondary market is the superset, but I have no doubt in my mind that a large portion of push is coming from the distributors of mutual funds to bring the customers into the automated distribution model, which is the StarMF model of BSE.
I wanted to talk to you in detail about BSC StarMF as well, because that's one of the key innovative platform that you have established, and it's doing very well for you as an industry as well. And you are the market leader there as well. So tell me, how is it working in terms of performance? Are you looking at any strategic tie-up for MF demerging into a separate and unlocking value for BSE?
In fact, we had announced that also, that our board had approved kind of strategic tie-up and all almost a year back, but we have not found any specific proposal which is kind of worthwhile for us to pursue, and that's where currently we are. So we'll continue to sort of look at any options that arises, but currently literally it's growing 80-90% year on year in terms of number of transactions for last 10 years, and even this year is no exception. In fact, it's growing very rapidly, and although we thought once the base becomes larger, the growth cannot be so high, but we are also pleasantly surprised at the kind of number of people joining in, number of distributors joining, number of investors joining onto the StarMF bandwagon is amazing, and some of the top names of the mutual fund distribution industry, banks, everyone basically think now this is the de facto kind of a infrastructure. And the charges are so little compared to any competent platform for the mutual funds themselves that everyone thinks, why not?
How do you value such a platform, Ashish? Because if you look at BSC as a market cap, it's low. But if you look at some of the parts, many of the parts have not been fully valued by the market, and that's the reason I was asking whether unlocking of some of the parts will help in unlocking value for BSC. How are you valuing BSC Star MF platform?
No, I agree with you. I agree with you fully. I mean, I think we have discussed this even 5 years back also, and you were right to point out then also that there is a anomaly in BSE's market capitalization vis-a-vis what the assets, the real assets as well as the kind of valuable IPs and markets are there. And that time also I couldn't give you a more detailed answer. Even today, I agree with you that a platform which is going to do literally the largest amount of mutual fund distribution. If it was a standalone company, it would have been valued at very large amounts. While as
give me an idea, give me a ballpark range, because I think it should be valued somewhere like a fintech company, right? That entire platform. So, what could be the range that you can look at?
Sitting in BSE, which is what I call conservatism, sort of applied. I and also being a CEO of the company, I wouldn't want to hazard a guess, but if you are in Bangalore with some sort of high-tech names, BSE is today collecting or giving almost close to 3,60,000 or 4 lakh crore rupees worth of mutual funds, which is in a year, which is like phenomenal compared to any other you might have heard of in any other fintech, right? And so it could be, and it's a profitable, it's not even loss making or it's not burning money. One of the reasons probably it may not be valued so high is because also it's profitable. If you, if you look at, right? So there are probably other reasons I'm not able to explain, but ultimately you have to kind of accept what market gives you, right? You can't continue to feel.
But it is also about asking the market as well, right? That it's an entity which is profitable and it is almost transaction-based fintech company. So what could be the base valuation for it?
It would be difficult for me to hazard a guess, but anyone who is able to value some of the new fintech, I'm sure if you ask those people, all the private equity guys and whatnot, they might be able to tell you, probably they might tell us to burn more, but otherwise I think broadly the story remains, the performance remains. And in the long run, I coming from what I call very conservative way of life, I think finally you have to be profitable. You can't sort of
because I know at some point in time BSE was in discussion with some London-based investors for Star MF platform. Is it still going on, the discussion, or is it now there is no discussion at all?
Currently there is no discussion, but if any opportunity arises, we are open to that. Our board is open to that. They've also told us that if you can create value for the shareholders, why not? But that's not our main job is to run exchange and run our operations well, and we'll continue to do that.
The other thing is about the SME market platform. That's also doing well for you. A lot of SMEs who are registering there. How is that platform doing for you?
Again, it's a very interesting platform. 347th company got listed. In fact, 2 of them got listed today. So today we have now 347 companies. We have raised close to 3,600 crore for them over the last 8-9 years. And their market capitalization is close to 37,000 crore. So effectively, even though SME companies, even we started a startup platform for young companies which want to raise even 1 crore, 2 crores. And today we have now 11 companies listed on startup platform also. So effectively, we think India's future is in investments more than trading. Wealth creation is not the same as infinite liquidity. You can literally have a situation where you can have infinite liquidity and no growth or no profit growth. And also the other side, you can have a situation where you have little reasonable liquidity, but very huge growth in profits. And for me, that is what sometimes the markets, even the media starts sort of creating synonyms out of liquidity versus wealth. Both are kind of orthogonal. If you have liquidity, it's good. But beyond a point, the liquidity is not wealth creation, right? And so for me, I think BSE has always tried to create wealth for India last 146 years since it's existing. It has helped India create $3.6 trillion of wealth now. And that's more than one third of India's wealth. It's out of trust, right? And that's not because you trade a lot. Of course, you should have a little bit of trading, but just the pure focus on trading for me takes away from the essence of stock markets. That's ability to raise funds, create wealth for entrepreneurs, for investors, for the society, create jobs, and so on and so forth. And that's where BSE focuses on.
Ashish, one of the biggest challenges which any of the companies are facing in the stock market is the fintech challenge which is coming in. 5 years ago, if you look at the top, brokerages, it would have been traditional brokerage houses. Today, if you look at it, it's all fintech companies. At least top 3 or 4 are of top 5. Four will be fintech companies who are doing that. How do you see this disruption changing the way people invest and the brokerage business going forward? Because you have a vast experience of the entire capital markets. So from that point of view, how do you see this changing the way things are happening?
No, in fact, 5 years back, 10 years back, we have both talked about on similar issues. And the fact is, the value which a brokerage house can derive from incessant trading, trading infinitely every day, is very little going forward. They will have to go into distribution, they will have to go into other products for them to have broad-based revenue streams. And that's what any right-minded brokerage house or their financiers at some stage will want to do that because today the trading is the name of the game, and you get the customers. But at some stage, you'll have to actually have some value derived for you also as a company, and that's where I think slowly everyone will realize. And many of them, I know they are trying. Some of the top young brokers, the new fintech brokers, are also some of the largest distributors of mutual funds today. And so that is happening also in some ways. They are also trying to set up their own funds, mutual funds now. They are also getting to distribution of insurance and so on and so forth. So I see them having some strategy, or their advisors telling them to diversify. Once you have a customer, then basically you can do a lot with that customer and give many more value-added features to them. That's what I see all of them seem to be doing.
You think that they've been able to leverage much better with using of technology as compared to the traditional brokerage houses?
Oh, brilliantly. Means, for me, the technology is the only change that happens in the world. The rest of the society surrounds it, and that has been proven in stock markets even more starkly over the last 25, 30 years. You can see most of the exchanges in India, which were traditionally closed down, and who couldn't keep pace with the technology. And that is true with the brokerage houses also. Even you yourself started with that, saying the traditional brokerages which have not kept pace with the technological and also the expansion of the universe in terms of the number of investors being serviced across the geography, going into hinterland. And that requires some what I call hard work and a leap of faith, which many traditional brokers probably didn't have. But some of them did have, and some of them have done really well, even if they were traditional brokers. So I don't see like old versus new. It's more about who adapts to the technology and also the changing scenario in a rapid way. And that's how I would put it. It's not new versus old.
Is it also leading to a slowdown of adoption of new products or new systems as well? I'm talking from a point of view like a T+1 system, where the regulator has given the option to the stock exchanges. You have technology can do whatever. You can connect it. You're a tech person yourself. You know how technology can connect through blockchain and others do all the work. But some of the old brokers who are not able to adopt technology will be objecting to moving to T+1. What is your thought on it? And as an exchange, what do you think of T+1? Do you think by early next year, you should be able to start that?
No, I think this kind of larger, what I call larger milestones are done internationally together by regulators. Like monetary easing currently is a fact across the world, not only in India or not only in the US, because they actually do coordinate those central banks. Similarly, many of the securities market regulators also do coordinate. So across the world, there seems to be an understanding amongst regulators that T+1 is now feasible. And probably if you can reduce the time to settle, it reduces the overall risk in one portion of the market today, which is the spot market or secondary market, although it is now very small compared to the risk which is there in the derivatives. And in many areas, like even in derivatives, you end up paying upfront margins. So it's not a big deal to be settling post facto instead of paying margins upfront. And that's where probably they've all come to conclusion. US is already trying to push for T+1. Many other countries are trying to push for T+1. And that's where I think SEBI is also wanting to do T+1. And so if not today, tomorrow, India will have to participate in that kind of flow. And India has always been a thought leader over the last 30 years in stock markets related technological enhancement, whether it was T+ through, I mean, we were doing weekly settlements in 1994-95, which became T+3, then we became T+2, and not rest of the world, I mean, the rest of the world did not move then. And markets will always resist till the time they can resist, right? All margins are being raised and all, even depository was resisted for that matter, and many other things were resisted. So for me, the regulators have a perspective. They all jointly decide across the world what needs to be done. They pace it in some practical way, and that's how I look at it, rather than trying to say our regulator is trying to go ahead. No, it's actually US regulator who will announce that first. Ours is a very pragmatic regulatory approach. We do provide a lot of time to people, do a lot of committee meetings and consultation, and then only SEBI takes decision. And they also try to come out with any changes in a very gradual way. So they have given a choice which stock to do, and so it may happen, but probably the pace will be determined based on what kind of success you get initially.
So you will be looking at T+1 in certain stocks come next year, 2022?
Yeah, I mean, as and when SEBI wants, in a way, BSE's prime focus over last 10, 12 years has been technology. So we are very, very good at any type of technological issues that come up. This is, in a way, as you rightly said, is a technological issue from the exchange side, from the clearinghouse side, from banks, from depositories. So all parts of the ecosystem have to be ready to achieve that. And not only now one exchange, but or one clearinghouse. Both clearinghouses have to be ready for anything to be achieved in this kind of coordination. So we are pretty confident that we would be able to pull it through as soon as what is required. But ultimately, how the market takes it, how the regulator kind of tells us the speed and so on and so, that's how we will take up from here now.
So even if it's in a small portion way, it will take off, but the expansion of and speed would be something dependent upon how the regulator wants to pace it. That's what you're saying.
Correct.
Okay. Another thing you spoke about, derivatives. That's something where you are trying your hard to garner a big market share. What is the kind of products that you're bringing in so that you have a thriving derivative segment?
No, in a sense, we are doing well in commodities. We are now the second largest commodities derivatives exchange. We also are doing well in currencies. And so those two derivatives markets are also, in a way, telling you that the BSE's technology is pretty kind of top of the line in derivatives also. And in equities, we do close to 1 to 3 lakh crore worth transactions a day, which is not big, given that competition does close to 1 crore rupees worth transactions in most days. So effectively, we are still probably, what I've been told is we are 7-8% of the market share today. Which is early days, I would put it. But literally Sensex 50, Sensex 30, both are available. on the equity derivatives, stock options, stock futures, all are available. And we think we don't have the issues of prices changing very rapidly within the intraday. That has been reported as quick trades in the media. And so we are pretty confident of our technology now. As and when the market wants to trade, we have a Sensex 50, which is equivalent to sort of largest trading index in a comparable sense, even in the number. Probably difference is only 500-600 points. And of course, Sensex is the kind of barometer of the Indian economy. So whichever way the market wants to trade, we are there. Of course, stock options, stock futures, because of the interoperability, you can trade on either of the exchanges and still have a set off as a net payment to be done on margin basis or even for settlement. So effectively, we think all the background work, the tick boxes are done. Now, as and when market wants to trade, ultimately it's up to them to do it. We can only provide all the facilities.
I want to check on the commodities segment, because you have now you are now basically a universal exchange with equities, derivatives, and commodities, and within commodities, spot and derivatives, where you can launch things. Somehow, our stock exchanges, whether you or NSE, have not been able to make inroads into the commodities market that much as compared to the traditional commodity exchange like MCX or NCDX. Where are you on the commodities segment?
So we are now around 9% of the market, and we are the second largest after MCX in the commodities. And I think what I've been told is that we have more than 70% market in the gold options, which is basically prime product. And these are all delivery-based products.
Yeah. Okay.
There has been a change of stance by the regulator, and rightfully, to make markets less speculative, more useful, so that you are able to take delivery, give delivery. And that's where BSC pioneered the stock options, as well as BSC pioneered the commodities deliverable options. And that's where I think we are getting good traction. We also have launched Sufi steel, that is a steel billets and other things. And that is also getting good traction. We have, of course, Gawar seed, Gawar gum, soybean, turmeric, and so on and so forth. So we are kind of going in a mix of agri plus non-agri kind of framework, and we are getting reasonably good traction that in a short time we have been able to go beyond the second largest exchange very easily. And today we do probably 3,000-4,000 crores a day of volumes, and hopefully we should be able to do much better going forward.
As part of your expansion strategy, Ashish, have you looked at merging with other exchanges like an MCX? There was some talks at some point in time about merging with MCX, but nothing went forward, and because there's no guidelines of merger of exchanges as such. But now that the markets are fully mature, does it make sense for the regulator to look at regulations with respect to merger of exchanges?
In a way, 91, 92, even later on, 95, 96, 2000 also, there was a concept of NSMS, National Stock Market Systems, and interoperability and so on and so forth. Finally, interoperability has come to India in a different way. Even merger of exchange was proposed those days. It didn't work out because of the way the stock exchange were set up in a way as associations of persons. Probably going forward, anything is possible, but today there is no context within which we are actually discussing this. So, everything is possible, but currently we think we should be able to win the commodities game in a way on ourselves because of the superior technology and similar distribution in commodity itself. Today, our 8 crore investors is like very, very, very large. It's an understatement, I would say, compared to any commodities exchange, right? And similarly, our 1,500 members is pretty large compared to any commodity exchange, right? And the depth we are giving, the spread of commodities we are giving, the innovations we are bringing, even in spot, as you rightly said to begin with. Literally, the spot gold exchange is pushed from BSE over the last 7-8 years, that now it's being allowed in GIFT City. But at some point, it has been announced also for the domestic part. And we would be at the forefront as and when the domestic exchanges or institutions are allowed to start spot exchange in gold. So we think we are basically here to add value to what is currently happening and get our share of the market. That's how we work on a very long-term basis.
No, I was asking this because the regulator was also open to the idea of allowing more people to set up stock exchanges in the country. Do you see there's enough enough of a wall for any new player to come and establish there, or is there enough room for more people to come into this market?
In a way, for me, country size of India, which is 18% of the world population, you can have many more things. America has more than 50 places to trade on. So, of course, you can have. And if you call yourselves a stock exchange or an exchange, there is a regulatory structure that goes with that, including disaster recovery sites, all the investor services center across the country, and so on and so forth. The cost of setting up an exchange and running it is very high. So, unless you achieve a minimum level of revenues, it will be a lot of burning of money for several years now, if not for decades. And if somebody is willing to do that for 2, 3, 5 decades going forward, like Amazon did in America, probably I would be unless things change drastically. Technology today doesn't cost much to set up, but to run the way it is required to be run with surveillance systems, all sorts of data warehouses, all sorts of people which are employed by the organizations, because it's a regulatory organization. So you are not supposed to outsource many things. Keep data with you, have disaster recovery sites across the country. You have to have investor protection, investor awareness offices. All those things make it really costly to run this kind of setups. But who knows? People may be able to work with that.
Ashish, we are running out of time, but my last question to you is about shareholders of BSC talking about how value unlocking can happen for BSC. If you look at the market cap of BSC, the CDSF stake value and the reserves, are almost matching to the BSC market cap, and that's where investors saying that it's time we should do some unlocking on BSC so that it brings value to the shareholders, because it has so much of IP properties and platforms, but they're not able to unlock value. When do you see that happening? Is there a timeline the board has put? Is there a timeline for you to do that?
No, in a way, board is kind of a lot of investors write to board. Even media reports come in like yours. And so board is acutely aware of this anomaly, and they have given us ability to kind of come out with proposals which are fair and also workable, because we are unlike any other normal commercial organization. We are also a regulator. And so we have to be very careful on trying to unlock value which may end up sullying the name. And so that's where the board is also very cautious. But is acutely aware and also sympathetic to this kind of value unlocking. So as and when it happens, we'll take up those proposals to the board, and if board approves, we will execute. So basically the way it works is almost today more than 50% of the board members are actually independent directors, chairman, and they are very, very eminent people. And so it goes through a lot of grind before anything gets approved, and rightfully so, because BSC is not a normal company, right? It's not a normal commercial venture which can sort of go and do whatever things it wants. It has to go through so many processes, so many approvals before it is able to do what is obviously simple for many other companies. And that's how I would put it, and I will keep it at that as of now.
Ashish, it's been a pleasure talking to you always. All the best, and thank you for joining us on BloombergQuint.
Thank you, sir.